Ladies and gentlemen, welcome to the Midday Market Monitor. Now, in today's video, we have another bloody day. And I hate to bring you that news, but that's just where we are, okay? SoFi, let's talk about this. I'm actually just about to send off a quick tweet here. But SoFi stock is at $15.90. Now, I got this idea from Sodak Zach in chat where he said, what's the possibility that SoFi ends up buying back their shares with the capital that they recently raised, considering the fact that the stock is now down, 45% or whatever since the last raise at $27.50? Well, if they don't, it means that they believe that they can do a lot more with that capital. But an easy 45% is pretty lucrative. And people obviously will most likely look at that as a good opportunity if they end up taking $1.6 billion and buying back the stock that they literally just raised with that $27 and then buy it back at $15.90. Could be quite interesting. It would actually be a much better stock than, or a much better outcome than before they raised. They'd have less outstanding shares. They would essentially buy back a net like 50-something million. But let's go ahead and take a look at why this could potentially be going down. These are recent comments from Trump that is talking about the potential for not re-escalation, but just continuous, of the same exact story that we've seen from Iran. That's bringing stocks down. Let's have a listen.
I have to jump into a cabinet meeting at the White House right now, President.
I built it during my first administration, and I used it during my second administration. Unfortunately, because I'd rather not have to use it. But it's a display of force and precision and skill like nothing the world has really witnessed, although you got a pretty good witnessing of it in Venezuela also. And that was a smaller version of what we're doing now. We're crushing their missiles and drone stockpiles, destroying their defense industrial base. We've wiped out their Navy completely, their Air Force completely. We've wiped out a large percentage of their missiles. And the missile launchers, without the launchers, the missiles don't do any good. And we've knocked out probably close to 90% of the launchers. Probably more than 90% of the missiles themselves. Between some they fired and more than they fired, we knocked out. We've also destroyed a lot of the factories. We're continuing to do that, but a lot of the factories where they manufacture the drones and the missiles. The drones, too, are way down. But the reason they're down is they go one way and they don't come back. Because for the most part, we're shooting them down. But we also are able to, we've really done tremendous damage to the places where they make them. And just so we set the record straight, because I've been watching the Wall Street Journal's fake news and all these stories that get printed like, oh, I want to make a deal. They are begging to make a deal, not me. They're begging to make a deal. And anybody that saw what was happening over there would understand why they want to make a deal. But they say, oh, we're not talking to them. Anybody would know that. And only a total fool. And they're not fools. They're very smart, actually, in a certain way. And they're great negotiators. I say they're lousy fighters, but they're great negotiators. And they are begging to work out a deal. I don't know if we'll be able to do that. I don't know if we're willing to do that. They should have done that 4 weeks ago. They should have done it 2 years ago. Or they should have done it when we first came into office, because 2 years ago, they had free reign under Biden. Sleepy Joe, worst president in the history of our country. What he allowed to happen to our country at the borders, and even with a thing like this. But not just him. Every president for 47 years, every president should have done this. They should have done it a long time ago, because you cannot give lunatics a nuclear weapon, and they would have had a big one. It stopped, really, when we did the B-2, but even before that, the Barack Hussein Obama, what he did where he gave them the Iran nuclear deal, gave them free will toward a nuclear weapon. Basically, he chose Iran over Israel and others that didn't want him to do it. But I terminated that deal. Had I not terminated that deal, you would have had a nuclear weapon years ago, and it would have been used, guaranteed. And one of the reasons you know about the guarantee is because their neighbors were sort of like bystanders. They weren't involved very much. They didn't choose heavy sides. They didn't want to because people were concerned with Iran. There was a big black cloud over the Middle East. They were concerned, but all of a sudden the war starts and they start shooting at these five, in particular, 5 countries. They start shooting at Qatar, Saudi Arabia, UAE, Kuwait, Oman. They start shooting at them, and everybody was shocked, including us. You know why? Because they're sick, and they had a plan to take over the Middle East. And some of those missiles that were shot at them were locked long before we even started this process. They were locked and loaded and aimed at those countries. They wanted to take over the Middle East, but we happened to come along, so it wasn't so easy.
Welcome back. Breaking news.
I know we're at the point where frustrations around the war, it honestly, exactly what we have been worried about of like, if this drags on, the ability to buy the dips and stomach what's going on, people just want to go back to normal. We were a lot richer whenever things were not happening in the Strait. So, yeah, we're just sort of, I think, tired at this point as retail investors. Now, that being said, if you do have cash on the sidelines or looking for opportunities, what are you looking for specifically? Are you looking for names and great companies? Are you trying to buy sort of the cigar butt-like companies where you think, hey, you know what? They might not be the market leaders, but they are way, way oversold. You know, there's some names like Salesforce and Adobe and ServiceNow and all of these companies that are getting beat up, which I think traditionally you would not think of them as cigar butts, but now the sentiment is at all-time lows, and market share gain is not really what people are looking at for, you know, names like Adobe. But they have great businesses. So maybe that's the way to play this right now. Or do you look to double down on the companies that have just worked traditionally? You know, Meta's down 7% today, 550 as a stock price. Okay. Down 7% on the news that they have made their stock or they have made their platform too addictive for children, which I mean is a little bit of their business model for sure. I don't think many people are questioning that. So yeah, 7% down. You're bringing this company down by hundreds of billions because they have to pay fines that are in the legitimate single-digit millions. Yeah, quite interesting. Alongside that, you have Nvidia down 2.8%, Google down 2.2%, Tesla down 2%, Amazon down 1%, Microsoft down 0.7%, which it looks to be holding up. But remember, we're at $368 a share, and then Apple is green. But I mean, OpenClaw is doing well. So, yeah. Okay. Yeah, Reddit's catching strays. Look at this. Take a look at this. So Reddit down 10.7%. You have Snapchat down 12%. Friggin' VCX. This is crazy. VCX. Now, this is not related to the Meta story. Oops, sorry. That's not what I wanted to do. VCX is down 40% on Citron Research is now shorting this business. Now, this is why I always say, like, there is, I think, moments in time where short sellers are doing, I guess, just work. This is definitely a short. Not because, you know, they go on to talk about how this company is a terrible business and like how they're, how they've done bad things, paying social media influencers and all that. I think that's maybe one way to do it, but this is where I always think like short reporters always fill their reports up with a bunch of crap rather than just saying, hey, it's trading at $400 and the net asset value of this company is worth $19. That part is simple math. And that's all you need to see. Everything else is fluff. But I mean, it definitely doesn't help as well. We've seen this from the Destiny Tech 100, where whenever this company came up, it skyrocketed up. Once insiders had the ability to sell, they used retail as a way to dump money onto retail investors and got the heck out of there because they found a premium that made Anthropic more expensive than Nvidia. So be careful with that if that's what you're holding. Obviously, if you're playing the momentum game, which is what I honestly think most people in that name are doing, and that's why it fell 40%, is because most people knew it was extremely expensive, but just like a GameStop or something like this, you can find higher highs because almost like greater fool theory, someone else is going to buy this at a more expensive price than you did. It's not usually the way that I like to invest. And so, we didn't get involved in this. I would never buy Anthropic at like what was the height? Like $6 trillion market cap is what they were pricing it at. A little too crazy for me. But hey, Micron also down 5.8%. This is just silly territory now. PE under 17, that's trailing. Morgan Stanley said that the report yesterday on the Google Turbo Quant was exactly a DeepSeek moment, exactly what we said. They said that the recent sell-off is healthy repricing, but still this is reiterating Micron and SanDisk as overweight positions. Memory is identified as a key bottleneck for AI infrastructure growth, and that the shortage is intensifying amongst very strong demand. So, while that's happening, this company ends up losing, $100 billion in market cap practically, and the demand for memory is only tightening. It's quite interesting. Then we ended up seeing, I think it ties in well with, what's going on, is to sort of remember the overall strategy that you're investing in. Talked about the sort of cigar butt approach. And this is because I was listening to Warren Buffett again yesterday. And maybe I could play it. I have it here somewhere in my history. Where is it? I got to find the clip. But the idea of buying great businesses rather than buying, I guess more poor businesses, because the problem with buying poor businesses for a turnaround play, just like we've said before, is your enemy is time. If it doesn't turn around quick, like let's say a PayPal, for example, if PayPal's stock doesn't end up turning around quick, what you end up having is market share losses continued over time. It actually makes the company worse. And so while that trade is trying to figure itself out, you're having Apple Pay do better over time, Google Pay, Stripe, Adyen, all of those companies are growing way faster than PayPal. And so PayPal is actually falling behind. So you need those plays to turn around quickly. Where if you're buying a name like a Robinhood, an Nvidia, or something like this, you don't need those plays to turn around quickly, because over time, if it doesn't work out in the first month or something like this, then Robinhood will most likely have more deposits, more customers, and more trading activity whenever the markets do turn around back in their favor. Same thing for Nvidia. If it doesn't work out, the hope is that growth will continue. They'll have a larger base for revenue and everything like this. But I'll let the great and powerful Warren Buffett say it, because I think he's a better speaker than me. And this is a great video if you guys haven't seen the Terry Leadership speaker series.
Not the biggest, necessarily the biggest, but buying Berkshire Hathaway itself was a mistake, because Berkshire was a lousy textile business, and I bought it very cheap. I'd been taught by Ben Graham to buy things on a quantitative basis. Look around for things that are cheap, and that I was taught that, say, in 1949 or 50, it made a big impression on me. So I went around looking for what I call used cigar butts of stocks. And the cigar butt approach to buying stocks is that you walk down the street and you're looking around for cigar butts and you find this on the street, this terrible looking, soggy, ugly looking cigar, one puff left in it. But you pick it up and you get your one puff. It's disgusting, you throw it away, but it's free. I mean, it's cheap. And then you look around for another soggy, one puff cigarette. Well, that's what I did for years. It's a mistake. Although you can make money doing it, but you can't make it with big money. So
I just got a press release from SoFi. This is absolutely huge news. So I don't know if it's going to make an effect on the stock. It is making a little bit. We're seeing some green candles here, but let's just finish this out for one more minute while he's talking, but then we'll talk about SoFi because they just released a massive statement.
Much easier just to buy wonderful businesses. So now I would rather buy a wonderful business at a fair price than a fair business at a wonderful price. But in those days, I was buying cheap stocks. And Berkshire was selling below its working capital per share. You got the plants for nothing. You got the machinery for nothing. You got the inventory and receivables at a discount. It was cheap. So I bought it. And 20 years later, I was still running a lousy business. And that money did not compound. You really want to be in a wonderful business because the time is the friend of the wonderful business. You keep compounding, it keeps doing more business, and you keep making more money. Time is the enemy of the lousy business. I could have sold Berkshire, perhaps liquidated it, and made a quick little profit, one puff. But staying with those kind of businesses is a big mistake. So you might say I learned something.
It's so important during these bad times to remember that time is the friend of the great company, just like SoFi, right? Or at least that's what I believe SoFi to be. And while sentiment can continue to fall here, it takes continuous execution, like what we're just seeing in this press release that I'm about to show you. They just signed an additional $3.6 billion worth of loan platform business in multiple new agreements. So you can have short reporters that are talking crap. You can have the stock end up going down, but what you need is actual execution. And that's what's happening over there. Okay. Let's have a listen. SoFi Technologies today announced the expansion of its loan platform business, committing over $3.6 billion in personal loan delivery across 3 new partnerships. SoFi closed a loan platform transaction with a leading global bank for an dude, I want to know the name. Transaction with a leading global bank. There is not many names there. I wonder if it's a GSIB. I wish they could say if it was a GSIB or not. For an expected loan delivery amount of $1 billion in a separate loan platform transaction with financial services and insurance groups for over $600 million over 12 months. Additionally, SoFi agreed with terms on a new Dude, lock in. Read like a human being. SoFi agreed to terms on a new partnership with a top 5 global private asset management firm, expected to deliver up to $2 billion over a 2-year period. So that's $250 million a quarter for that deal. $600 million over 12 months. That's $150 million a quarter. So we're now at $400 million a quarter in loan platform business deals. And then $1 billion. Did they say this? Is that also over 12 months? So yeah, we're at $650 million per quarter in loan platform business deals. Personal loan only. All brand new. SoFi's loan platform business refers pre-qualified borrowers to loan origination partners, as well as originates loans on behalf of third parties. These new agreements reflect the continued strong demand for personal loans for both members and debt investors. So wait, you're telling me? Wait a second. Muddy Waters, Carson Block, said that the loan platform business is not real. They're essentially still lending. They're taking on all the risk, yada, yada, yada. It's essentially a legal business. But they dealt with a leading global bank that signed up with them, a financial services and insurance group which is probably for their whole loans portfolio. And then an additional private asset management firm for an additional $2 billion. We're going bust. It's all legal. Adding 3 new partners to our growing network shows the unique value that the loan platform business to asset managers, institutional investors, and partners more broadly. By connecting strong borrower demand with institutional capital, we're building a capital-light, fee-based business that complements our overall lending business while leveraging our existing technology platform capabilities in underwriting, pricing, marketing, and servicing. Damn. SoFi's loan platform business drives capital-light, fee-based revenue by earning fee-based income, not according to Carson Block, for originating loans for partnering while retaining servicing rights. In 2025, SoFi's loan platform business secured over $10 billion in commitments to meet strong borrower demand. SoFi. This, honestly, is a way better way to refute Carson Block than just saying, hey, you're wrong, and here's the reasons why. They can just say, hey, here's another $3.6 billion. You know, we'll take this up with the OCC and the Fed. You can go ahead and try to read through those forms, but we don't need to send you a letter anytime that we want to do business. Who are you? It's my favorite thing. Like whenever someone's like sends a comment in my videos or something, they don't agree with what I'm saying, they put up this whole list of things that I disagree with. I'll just comment, who are you? Like, why do I need to break out in this comments section for your things? Because you don't understand my video. That's what SoFi needs to do to Muddy Waters. This is the first time we're hearing about you, Carson. Please, instead of asking us for certifications, that's how you say it. Jeez. They can simply say, where's your certs, Carson? We just dealt with the global bank. Stock still down 3.3%. That's how bad of a stock market that we're in. This would have led us higher than 32 back in the day. But it's not the same market, and we need to adjust accordingly. Look at this. SoFi even tweeted it out on their investor relations page. They're trying to spread the word. I'm sure we'll see an Anthony Noto retweet here in a sec. Yeah, top comment here. I think this is great. But I thought that SoFi's loans were dangerous, fraudulent, and defaulting like crazy, and no one wants them. Yeah. I guess somehow they're getting a premium. It went up like 10 cents on the news. Great. You guys are you're getting too stuck in, not with the news, but with what the stock is doing. I promise you, the stock will not be aligned with how the company is performing. If you end up looking at SoFi's performance over time, and we can do this here. I'll just pull up Fiscal AI. And you take a look at their total revenue over time. Okay, and then let's also put that people like Brian Feroldi or something talk about this a lot. And it's great that they do because it's insanely important. You're never going to align perfectly. The company's revenues over time has gone in one direction. The stock has not always gone in one direction. We've seen massive sell-offs, periods of years where we were under $10. That's what I saw someone comment at me, and they were like, yeah, the only people winning are the people that bought in insanely small windows of time whenever you're still in the green. I'm like, small periods of time? Like we were at like $4, $5, $6, and $7 for years and years. Okay. It happens. It's not a great feeling, but then the pop happens insanely strong, where a company can go from 7 to 21 in a few months, but the performance of the company didn't triple, but the sentiment did. So now we're having that in the reverse right now, where the stock is not correlating to the news that we're actually seeing on the business. We're in a, people are voting where SoFi is going to be. I'm trying to focus on what's the actual weight of the company, not the vote of the market, but what's the actual weight of it. And let's put it on the scales that way. This is a stronger business than what it was a month before, right? I wish I had more conviction when it was 6, but that's what people are doing now. Like, it's so hard to go back in time and remember how you felt whenever it was 6 and people were calling for $2.50 and all of these things. It's exactly what's happening whenever people are calling for $8 today. Like, oh, $15 or $16 is not the bottom. It's going to continue to fall. I mean, yeah, if the macro continues to get worse and everything like this, of course, sentiment can pull it down much further. But if there's a Trump tweet or something like this that ends up saying, hey, you know what, we're leaving or yada, 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 the markets can turn around quite quickly. But that doesn't necessarily mean that he can say, hey, you know what, we're going to have a deal in 5 days and the market goes green forever. Because if they reinitiate conflicts, if the idea that inflation stays sticky, if the idea that rate hikes are required, then the problems can persist longer than, maybe you feel like you feel solvent for. I'm not telling you to write leaps down here. It can get worse. But if you're looking the way that I invest, which is I don't try to promote financial advice or something like this. But the thing that I like to talk about, my strategy, is to invest in great companies, just like Warren Buffett told us to. I'm not the expert. He is. Invest in great companies over long periods of time. And you'll compound your wealth so much more. And the reason how, people can say like I sound silly or something because markets are down right now. It's like you're looking in a small blink of time. And then all the comments, if people have been around the channel, whenever the markets are green, then everyone's calling each other geniuses and how much money they've made. It's like, you weren't a genius back then. You're not a genius now just because the macro is in your favor. The genius part is staying patient and holding on to great companies. Okay? And it's not even that tough of a thing to do. SoFi is a great company. Well, I would say that if you look at businesses that can compound at over 40+% rates for multiple years, I would put that in the great company category. You don't have to agree. You can go out and buy Robinhood or something like this, but then there's a valuation difference. So there are better businesses than SoFi, like just on pure numbers. Like Robinhood grows faster than SoFi. But then you have to factor in valuation as well, right? And what's the valuation that you would put on a company growing at 40% versus a company that's growing at 60%? Is it double? Is it 4x? Is it 5x? And not long ago, we had Robinhood over $100 billion market cap and like shots fired at Hood. I own them both. They're both in my top 5 holdings. But you can't just look at growth alone. You need to look at both. And so one of the things that Warren Buffett said in the clip that we just played was, you want to look for an excellent company at a fair valuation. Excellent companies at extremely high valuations can still make you money, but there's worries there. Meta's a great company. Meta is a great company. But what's so funny is like SoFi's growing faster than them. This isn't fair to say either, though. I don't think that this is fair to say. SoFi is 50% off. The macro is changing. That does affect SoFi's business. Okay. So I would probably say that they don't deserve to be at the prices that we were at whenever we expected them to get 2 rate cuts this year. That does affect how their lending ends up happening. And so just because a stock at one point touched, like this is a thing that bothers me too, is like people look to SoFi's price and they go absolutely peak to trough. And they go, this company was at 32.70 and now it's here. It's fell down 50%. I'm like, okay, it was a candle wick that brought us to 70 or 32.70. There was not a long time at all that we were above 30. So really, I would say that the top is about 30. 32 were blinks of very special days that ended up coming down intraday. And that's a huge difference. It's like nearly 10% difference. But you have to balance where we are going forward. We're in a different macro than where we were. Macro only makes SoFi 20% off. Yeah, I mean, maybe. SoFi has bankrupted me. Sounds like leverage, if that's the case, in which I don't promote that. You said you're making a SoFi video yesterday. Is it out? It's not out. No, it'll probably be out today. And I'm glad I waited because now I've got a little bit of additional thing. But once Marshall comes on, the videos will be much faster. Hopefully. So yeah. Okay. Anyone buying Meta down here? Dude, it's super interesting. Who's Marshall? I mean, you'll meet him here soon, but he's going to be the first employee of future investing. It's going to be awesome. You need to step up your normal video games. Well, I mean, dude, we're going to try to get out a video a day, a live stream a day, and then continue at that pace, assuming that there's news to cover that I actually want to cover. But there's been a lot of companies like Micron and stuff where I definitely have had enough, where I've want like enough content where I'm like, I need to speak about this, and then just haven't been able to cover it. I give them a week. That's funny. Yeah, I don't know if he'll be here Monday. I don't know if I'm like kind of throwing him to the wolves a little bit in terms of like hiring him on and being like, okay, now get in front of the camera. Because for me, like it's really comfortable. And what's so funny is like whenever I meet you guys in person, I'm all nervous and it's weird meeting people in person or talking in front of people. But on camera, it just feels like it's like me and you individually, even though it's across 1,500 people. But if I spoke in front of a room of 1,500 people, I wouldn't even be able to get my words out. Crazy. You guys are the wolves. Yeah, you guys are the wolves in the analogy. You guys are ruthless, honestly. There's a lot of nice comments for sure, but they're not always nice. And if you're not used to that, it can definitely be hurtful. Did you cover the SoFi news yet? Dude, we're so quick on this channel. It's already done. We're already past it. No, so essentially SoFi just announced that the loan platform business once again just found $3.6 billion of new deals across 3 different partnerships. An insurance and financial services company, a global bank, a large global bank, and then a private asset manager. Please, can SoFi go to 10? You're the guy with the cash, eh? I don't have cash, so I don't want it to go down anymore. I'm done with the pain. What's SoFi's plan B if rates go up? I'm not sure. He doesn't we're not pen pals, so he doesn't tell me those types of things. But I do believe that they will have a strategy. Noto ended up beating all their expectations for guidance and raising guidance during the fastest rate hike cycle in Fed history. that does give me a little bit of execution credit on giving Noto the benefit of the doubt in steering through an environment that they weren't expecting. And I'm pretty sure he even said that on our podcast as well, that he did say that SoFi would be able to handle rate hikes. But listen to this. I tweeted this out just a little bit ago. If you guys aren't following me on X, give that a follow. Hear me out. SoFi raised $1.6 billion at the end of 2025 at a share price of $27.50. I can't, my sleep score is going up and I'm at 89 here. I think I'm might be sick or something. I don't know. The stock has since dropped 42.3% at the time that I tweeted this. The stock's now trying to go up. Is it time to issue a share buyback? They issued 58 million new shares, and now SoFi has the opportunity to buy back 100 million shares using that $1.6 billion that they just raised, essentially removing 42.5 million fewer shares than before they ever did that raise, effectively undoing the dilution and adding an additional bonus to EPS. Is this something that you guys would be interested in seeing? Nvidia bull case. It's a 3-part. Y'all ready for it? WTF? I'm ready for it. Thanks for the follow, brother. Is Marshall a speech therapist? Yeah, he should be coming on just to help me learn how to talk. Jensen, Huang, if the $500 billion engineer does not consume at least $250,000 worth of tokens, I'm going to be deeply alarmed. Those 75,000 employees will be working with 7.5 million. The hysteria of the labor market. We are losing jobs to AI because of the efficiency. Nvidia is hiring at an astronomical pace. Others will lay off, and Nvidia is hiring. This means Nvidia is scaling its technology advancement at many year multiples. 1 year of Nvidia in the past may be worth a few months of Nvidia's product production today. I don't like your bull case, but I feel you. You know what? I was talking with Vitsal in the chat, and he said that he runs a jewelry business, and he just hired his first software engineer. What the heck is a software engineer doing around his jewelry business? He said that person is going to be solely focused on helping solve internal processes using artificial intelligence 100% of the time. What might be interesting is a bunch of smaller businesses end up hiring tiny teams of AI workers. And instead of, and it's not going to be the plumbers and the electricians and the jewelry store owners and all of these people that want to try to figure this out. And so maybe the past was those small businesses would go to a Salesforce and a Zoom and a Microsoft and all of these things, say, hey, give me the tech that we need to help our internal processes and all this stuff. And what it might be in the future is, hey, we need to just hire a guy, 3 people, and say, you know, let's essentially build our own processes in-house. And that's actually cheaper than having a ton of different software licenses for our 25 employees. It's happening right now. I have a 3-person team doing exactly this with AI. Love to see it, Paul. But that's what I mean, though. We might not end up seeing the job losses that that people are expecting. Why don't you like it? I just didn't know what he meant. The people that are going to get laid off are the people that are the slowest workers at Meta. They're not the top people. The idea that Jensen is spending tokens and everything like this is not going to be unique to Jensen's business. That's going to be the bull case for all businesses. So I think not the crap on the bull case, but I don't think that's a bull case unique to Nvidia. I think that's a bull case unique to all businesses that will utilize artificial intelligence. We're going to get more use cases out of every company, every employee. I'm officially a proud bag holder of Microsoft, Broadcom, and SoFi. I mean, that dude, like, you should be a proud bag holder. Those are phenomenal companies. All right. Tanner, I bought Leaps today. That's the exact same thing I said not to. Obviously, I wish you well. And that might not even be a bad play at all. I just think I worry whenever stocks fall that people end up taking out leverage and getting into options and all of these things. If you're a Leaps kind of guy, like obviously you're taking on the same risk that you're taking on before, and that's perfectly fine. But if you're taking on undue risk, like something that you would never do before, like you're increasing your risk tolerance because things are lower, I think that's very worrisome because things can always get worse. So keep that risk tolerance nice and flat. And I do obviously think that SoFi will increase over time. But yeah. Do you know what Micron's multiple is as of today? Well, I just saw that their share price or their trailing PE was under 17, but let's check their forward here, assuming that forward PE. And I'm seeing a forward PE of 4.22 times. Assuming Turbo Quant doesn't change the whole thesis. I don't think it does. Bro, I bought Leaps on real companies. Yeah, but you don't know, like, that you're putting a timeline on when you need the market to recover, which it might. I mean, depending on like, if you're talking 2 years out, then you're probably fine. I'm just saying, like, it doesn't need to return in 2 years. Bro, please talk about Meta. You know what's so funny is there was actually a report, a very positive report on AppLovin, or sorry, on Meta that was harmful to AppLovin. AppLovin's down 9.8% because Meta might be internally making processes that essentially make their business obsolete. Now, people who hold AppLovin are saying, well, they actually have very strong competitive moats and everything like this, but that's why the stock is down. But then the company that is potentially replacing them, Meta themselves, is also down, which I think is very funny. Now, they've been constantly delaying products, and it hasn't been great for the avocado stuff and the Reality Labs, and they're laying people off, and it's, there's a couple headaches here. But overall, the small fees that they have to pay for making their product addictive and all that stuff, which might end up bringing more scrutiny down the line if they don't change their actions. But overall, I still think it's a ridiculous price to pay. Ridiculously cheap, I should state. I'm definitely a Meta bull. But you guys know I'm extremely bullish on Nvidia, and I just heard someone talk about Nvidia. This clip is unbelievable. This is from the Lex Fridman podcast. I want to take a listen to this and sort of think about, the conversation that we had previously on buying great businesses. Let's have a listen.
I'm absolutely certain that the world's GDP is going to accelerate in growth. I'm absolutely certain the percentage of that GDP that will be used for computation will be 100 times more than the past, because it's no longer a storage unit. It's a product generation unit. And so when you look at it in that context, and then you back into what does Nvidia do, and how much of that new economics, new industry would we have the benefit to address? I think we're going to be a lot bigger. And then the rest of it, to me, is is it possible for Nvidia to be a $3 trillion revenues company in the near future? The answer is, of course, yes. And the reason for that is because it's not limited by any physical limits. There's nothing that I see that says, gosh, $3 trillion is not possible. And as it turns out, Nvidia's supply chain the burden is shared by 200 companies. And the fact that we scale out on the backs with the partnership of this ecosystem, the question is, do we have the energy to do so? And surely we will have the energy to do so. And so all of these things combined, that number is just a number, And I still remember Nvidia was the first time we crossed $1 billion. I was reminded of a CEO who told me, Jensen, it's theoretically impossible for a fabless semiconductor company to exceed $1 billion. And I won't bore you with why, but of course it's illogical, and there's a lot of evidence we're not. And then somebody told me, Jensen, you'll never be more than $25 billion because of some other company. Somebody told me that you'll never be, because, and then so those aren't first principle reason thinking. And the simple way to think about that is, what is it that we make, and how large is the opportunity that we can create? Now, Nvidia is not in the market share business. Almost everything that I just talked about don't exist.
Mhm.
That's the part that's hard. If Nvidia was a $10 billion company trying to take Nvidia's share, then it's easy to see for shareholders that, oh yeah, if they could just take 10% share, they could be this much larger. But it's hard for people to imagine how large we could be, because there's nobody I could take share from. And so I think that's one of the challenges for the world is the imagination of the future. But I got plenty of time, and I'll keep reasoning about it, and I'll keep talking about it, and every single GTC will become more and more real, and then more and more people will talk about it. And one of these days, we'll get there.
Oh, sorry. I keep doing that. I think that it's quite interesting to, well, one, suggest that you're going to have a $3 trillion annual revenue business. If that ends up coming true, it'll look very exciting. Next, however, is where he talks about how people have a very hard time assuming where Nvidia is going to be, because they take our current products and then they project out of where, that'll lead us. What's the total market cap of gaming GPUs? How many people game in the 1990s? How many like computer gaming in 1990s and all this stuff? And you can never project out to, well, what will photonics networking system, the Grok licensing, the NVL 72 pods, like entire data centers of pods. It would be impossible to ever try to think about this. And I think about this constantly whenever people say like, okay, well, how does SoFi get to a $100 billion market cap or something like this? It's like, the truth is, I don't know. Okay. But people want me to have a business plan for that company. People say bet on the founders and the leaders and stuff like this. And the previous execution, how great are they at evolving to the problems? But then they also want you to defend the business down to, okay, well, whose customer is going to end up buying their product, and how much are they going to charge, and how are they going to make margin and stuff like this. Is like, that's for them to figure out. But they've done it for 10 plus years. They're in an extremely defensible area, and they've constantly expanded their product. And so whenever you look back at a SoFi, which I'm using as an example, but this is the same for Nvidia and Microsoft and Palantir and every single innovative company in the world. It doesn't even need to be an innovative company. It could be a Coca-Cola, like just expanding the product lines, you know. But a SoFi, for example, was a student loan and personal loan lender. Now they are in deposit accounts, which they were not in years ago. Okay. And now investment accounts, and then credit cards, and then taking those personal loans and credit loans, which before Q3 of 2024, we didn't even have the slightest inkling that they were going to underwrite loans for other third-party, they were underwriting loans using other people's capital. I think the future is going to look like them underwriting loans for users that are not part of their system, okay? So really third-party lending, essentially what Upstart does. Well, actually, that's not true. Upstart does a lot for their own business, but they will do that for other banks as well. And so, to me, I'm just a believer, and not a belief. Like this is true too for people that don't know my history with investing. I started in 2020 or not 2020, 2015. Over 10 years of investing. A couple of those years were really, really early learning. But at 18, that's when I originally started, with almost the exact same optimistic mindset of, investing over time. So getting names like Tesla, Nvidia, Shopify, a lot of losers in the mix as well. Okay, it's not like I just nailed it out of the park. The interesting part, though, is that whenever you identify the losers, you drop them, and because of the way that I invest, which is just common shares, I don't lose more than I ever put in. Okay. At most, you lose 100%, and I've never taken a company down to zero. So you trim those companies whenever the thesis breaks, and then you buy companies that are winning, and you win a lot more than 100%. You make true multiples on those companies, okay? And so a single 10x business, which everyone seemingly during this recent crash feels like a 10x is something that is impossible to happen. We literally witness it all the time. Maybe not in every industry, maybe not every company, but over time, like even the Coca-Colas and the insurance companies and the JB, like they compound over time. It takes about 7 years for the S&P to double. Okay, given enough time is your ally in investing. If you're in market share winning, total addressable market expanding businesses. So I monitor the markets every day to make sure that the companies that I'm holding continue to do that. And that doesn't mean that you sell at the first sign of something not happening the way that you want, like a Meta getting sued. Like if this was Meta's first lawsuit, I might be more interested in caring, but like this has been a long-standing problem of theirs. 1 second. But so what I was going to say is just like, during these hard times, companies will reprice. We're going to have hard times in stocks. But being patient is such an advantage for long-term holders. Such an advantage. And I see people like Doogie Pie in the chat. Like she has her own strategy and that works, right? But I would be beside myself if I knew that SoFi was a winner, Nvidia was a winner. Micron might be the most contested one in that list, but like those two, I definitely believe in. Okay. And then it doesn't go down to 10. Let's say it goes down to 12. The problem with selling and re-entering is that you have to get right both times. You have to get right on your sale that you end up leaving at a good price. And then you have to find entry back in. And if you wait for entry, then you could end up seeing what a lot of people presume to be a dead cat bounce to begin with. Okay. SoFi ends up start to correcting, and you go, no, this happens. Stocks start to go back up. I'm not going to re-enter right now because we have a strategy to get back in that's a lower price than it was before. Okay. And this happens constantly. where people tell me the prices of where stocks are going to go. They get close, but they didn't go down to the prices of where they said that they were going to go. And then they go, well, I got close to naming the bottom. It's like, yeah, but then you didn't enter. If you thought you were going to get at 10 and it went down to 12, when did you buy? And if you're not buying now and you're waiting for lower, then you don't have shares for the recovery. DCA, I do DCA. I DCA on the way down. Like I think the time where I care about price is whenever I'm looking to buy. Okay. And so I enter in to companies bringing my prices down. But while I'm in this hold mode, like for Nvidia, between now and 2028, unless the thesis breaks, the stock price could go down to 100. I mean, it could go down to 50 on Nvidia. It would not, like, I would sleep so fine, you guys have no idea. Because the growth is there. The product is absolutely real. I use the AI products that are being created and all of these things. They're absolutely beneficial to my productivity, to lowering my expenses, to all of these things. And I think that the people who are using these products, even though it's in the hundreds of millions, are still early adopters. Every single organization, every aspect of business will be ran on many of these systems. I think that CPU data centers will become accelerated computing centers. Everything will be AI. Your phone is going to turn into a device that is essentially a local device for AI compute. And whenever it needs to solve complex problems, it'll send it out to a data center to do that compute and then send back the answer. If you don't believe that, buy a different industry. That's fine. But like we were just watching that Warren Buffett clip. There's another part in that Warren Buffett clip where he says, I'm not smart in a lot of areas, but there are places where I am smart and I try to stay around those spots. For me, I find that to be technology and certain fintech areas. Okay. And so I don't want to try to, and this is just my strategy. But if you're listening to my words or anything like this, I can only tell you my strategy. I'm not going to tell you someone else, like something I don't believe in. I'm not borrowing the conviction of others to try to say, hey, you know what? Like, I think that there's a lot of strategies out there that work, and they work in certain areas. I mean, like, Peter Schiff. I mean, I'm not talking against his character. Like, he's probably a good guy, but he's an absolute gold bug and loves gold. But that strategy works in times whenever gold is going up. Most times, his portfolio is underperforming. And then in small blips, gold has this massive rise, and then he gains a ton in popularity because everyone goes, wow, look, he was right. And then you have to look back. It's like, okay, this guy has been wrong for the last 10 years. I want to try to stay in the spots that have been consistently most right, which I think is technology. You look back 20 years ago, the biggest companies in the world were like ExxonMobil and everything like this, and tech companies were nowhere to be seen. And now you look at it, and all the biggest companies, every $1 trillion+ business for the most part is a technology focused industry. Because the TAM, the total spend on software, the total spend on the software engineers has just exploded. Time is the benefit of, or time is to the benefit of innovation, So that's where I stay, and I'm not going to move my portfolios to natural gas or something like this, even though there's amazing plays there. I know nothing about those spaces. And whenever that moves, I'm going to be really worried. But what the heck is going on with Nvidia right now? Watch that there's been a report or something like this that the thesis just broke, and then this becomes like one of the most viral clips ever of this guy. Idiot online explains his thesis while Jensen Huang ends up retiring. I'm not seeing anything right now. What I am seeing is Musk targets retail investors in SpaceX IPO. Elon Musk is considering allocating up to 30% of SpaceX's IPO to retail investors, far above the typical 5 to 10%, to tap loyal fans and stabilize trading after listing. Not bad. The plan includes a hands-on approach to banks, assigning firm-specific roles rather than broad competition. Bank of America is expected to lead the U.S. retail distribution along with firms like Morgan Stanley and UBS. With the potential valuation nearing $1.75 trillion, demand is expected to be strong. The goal is to attract long-term investors and avoid volatile pop and dump trading after what could be the largest IPO ever. Not bad. Elon definitely has a ton of retail support out there. TQQQ is very tempting. Duke, you just said that SoFi's going down to like 10 and Nvidia, the largest component of the triple Qs you just said was going down to like 145. It's the largest component. Look at Meta too, down 8, nearly 8%. And then like just got off work. Is the Meta thesis done? What is done? What is done on Meta? Are we having a mass exodus away from social media? You're letting the stock control your views. Yes, social media is done. Trump destroying the world. Well, I mean, I definitely think that the macro is the big negative sentiment here, which could put hampers not just on Meta and Nvidia and SoFi, but on all equities, right? If we do see rate hikes, that's just bad for all growth. If companies don't have the ability to take on debt, which they still do after rate hikes, but it's more expensive, that's not good for hiring and their ability to, grow extremely quickly. And then the investors of those equities that might even see that there's opportunity in those names, a larger percentage of them will end up seeing that the risk-off investments of just going and buying T-bills at higher rates is, more advantageous. And you would say, hey, but the people that buy T-bills are not the same people that are buying Nvidia stock. And that's true, but it's almost like a stepping, like it's almost like a ladder of different investors. So the people who feel that the 25 or 50 basis point changes in treasury bills, if they end up seeing a lot of interest rate cuts, that could push them into very, very low risk equities. Okay. Those low risk equity investors that found safety and solitude in, I can't think of a great example, might end up moving their money into high dividend paying utilities, maybe an AT&T or an Enbridge or something like. And then those people who feel like the valuation in deep value ends up getting pushed up, ends up taking more faster growth, low dividend, well, not low dividend, maybe like a 2% dividend. And then those people end up moving up to the nearly no dividend growth stocks. And then those people end up moving into hyper growth. And then, so it is a shifting thing. It's not that the hyper growth investors turn into treasury bill investors, but they might end up working their way down into something that might have some dividend, some growth. Yeah. Your stream icons over the past month are funny to look at, back from smiling and frowning and smiling and frowning. It's just based on the QQQs. If we're red, the pictures are red. If we're green, the pictures are green. And so, yeah. SoFi, are we changing off this news recently? No, back down to finding literally new lows after announcing a $3.6 billion announcement. Let's see. Recession fears are building. 37% chance. I checked this a few days ago for a recession. It was 36% a little while ago. Now, I'm pretty sure Morgan Stanley came out recently and said that the chance of a recession was under 30% for them. But yeah. Okay. We wouldn't have this with Biden. I honestly think something else would happen. I'm not a political guy, so the people who have strong views here will disagree or leave the chat or something like this. But I honestly think if like we were with Biden or something, there'd be a different problem, and then everyone would have pointed that it would have been better under Trump. And this is always what happens. It's like whatever person is in charge gets the blame. They all take heat. And then they had wished that they had voted for the other party. And then it just goes Democrat to Republican to Democrat to Republican as things, you know. I actually think life does get better, but the view, the debt spiral, the K-shaped economies are getting worse, or the view of them are getting worse. But people always point the blame to whatever the person that is. Yeah, they all suck. Yeah, would have been the same under Kambala. Oh, that's so funny. Holy Google. Google the... Hello? What is happening? Did Sergey Brin just retire for the second time? Norway Parliament passes bill to cut petrol and diesel taxes until September 1st. I also saw Trump was looking at doing that for the United States. Oil is supposedly going up. Let's have a look at that as well. 94, 95 a barrel. I mean, it's definitely not going down. Yeah, timber. I see a mitten chat. Timber. It's crazy. Yeah. 94.90 on crude right now. Let's go take a look at Google. I want to try to find... Amit, you're supposed to be tweeting. Apple to open up Siri to rival AI assistance in strategy shift. That is the possible Google concern here. Apple to open up Siri to rival AI assistance in strategy shift. So maybe it's not just Google. Maybe they're looking at OpenAI and a bunch of companies to see who is going to help them at the best prices with the best models. That is why Google, I think, just took a big hit. Go look at my latest tweet. It's good, Cope. I'm looking for Cope right now. Honestly, dude, nothing feels better than confirmation bias. It's the best. As ugly as this market has been, here's a pretty crazy statistic. From January 1st to March 26th of this year, the S&P has had 29 out of 58 days close red. 50% of the year has been red, and the index is down 4.2% year to date. From January 1st to March 26th of 2025, the S&P was down 10.2%, significantly worse than the current decline. And yet 61% of days, 35 out of 57 were red, 11% more than the 50%. As ugly as this market feels, because there's so much whiplash up and down based on war headlines, last year was worse during the same exact period. Hopefully 2026 doesn't get as bad as 2025. That is pretty wild. You know what's so funny about these AI agents is they all use the same background, so I can immediately tell that this is an AI agent. Or if I had to guess, this is ChatGPT. Doesn't make it less appropriate. I just like, it is interesting. It used to be hallucinations, and now as they're getting better and better, the percentage in the trust, Gemini, got you. The trust builds for these models, and people are using them more often. Rightfully so. See, this I actually don't think is a good tweet. Why is SoFi talking about expanding the loan platform business? This is not their investor relations page. This is SoFi. Like, their customers that don't even know that this is a tradable company is trading or is showing off their investor.sofi.com. I don't, they're trying to get the word out too much right now. If Noto wants to tweet it, if the investor relations page wants to tweet it, I think that that's appropriate. The actual company tweeting it, it's like, imagine Coca-Cola, like, we just secured a long-term distribution deal with Costco. And you're like letting Coke fans know that you just signed a major deal. All right. Twitter is where stock people go. I think, yeah, that's fair. That's fair. Okay. Google down 3.3, Nvidia down 3.6%, Meta down 8%. Apple still seeing those open claw purchases, I guess. We could be in a recession, full-on recession. My girlfriend's still going to have the newest iPhone. It is true. But then again, I'm still going to be making my Amazon purchases and all this stuff. I'm curious to where like Costco is during this moment. Green. Walmart has been green most of the year. Red today, but year to date, that's up nearly 10%. Silver, almost flat on the day. Navan up nearly 40%. I think it was earnings or something. What was going on with Navan? Let's check. They had earnings yesterday. They beat on revenue by 10%. They beat on EPS by 105%. Well, I mean, they expected EPS to be negative 36 cents. They got 2 cents in reality. So they broke profitability. Stock's up 40%. This is like corporate travel management, stuff like this. I've used the platform before. It's actually really nice, but I wouldn't invest in the company. It's just too small. Next decade, up 12%. The VIX is up 11.2. Where is fear and greed? What's crazy is the RVI, the Robinhood, venture fund is up 8%. Well, VCX, the company that Citron Research just ended up shorting, and rightfully so, down 30%. This was actually down like 45% earlier. There is the dip is being purchased on VCX, which is mind-blowing to me. Tanner, why are you doing this to us? I think who said, I think Sodak Zach is like, I never miss a Tanner live stream, but honestly, I don't want to watch right now. Something like this. Like, why are you making me watch this? Yeah, VCX, I think, is going to continue to fall. But look at the sentiment on these social media companies as if, anything is going to change. If we go into a recession, there's less advertising money for sure. Rate hikes slow down sales and marketing. There is worries for social media companies. Seems like a bigger reaction than what I think is warranted, however. Reddit down 10.6, Snapchat down 12, Meta down 8. And that's nuts. Optical names, Coherent, Lumentum. Where's AAOI? I saw that one down 13%. All of these down roughly double digits. 8Co Holdings down 8%. This company had ran a little bit recently, some pretty green candles on the idea that you're now going to be able to get, what What the heck? Why is this broken? I freaking hate Moomoo. I don't know how to change this. I don't know if there's like a button I pressed, but whenever it like zooms in like that, drives me nuts. RVI is surging. Yeah. Well, Warren Buffett once said, panic and sell everything. Classic Berkshire investing tips. Do you guys put stop losses in your positions? No. Because I know... You know, I got to stay strong. I believe in the companies. Now, if there's a real thesis breaker, if Meta starts losing customers or something, people don't use their platforms as much, and we start to see a decline in overall user bases, that could be a thesis breaker. That the network effect of their business is threatened. I don't think that's what we're seeing. If there's a day to say it, it's today. No. Soundboard? I wouldn't consider it a soundboard. I do have some funky stuff here. Can you guys hear me right now? I don't know if that worked, but I've got some stuff. Okay. Did my voice change? Sounded like you were a pilot? Okay, cool. Yeah, I don't use them, but I've got some stuff. All I had to spend was $1,000. Yeah, it actually says megaphone, so I don't know if that's what it sounds like, but okay. Dude, look at this. Is so painful to look at. CoreWeave down 7, Oklo down 7, Teradyne down 7.2, Micron down 7, $350. It broke below $400 billion market cap. This is a $399 billion company that might put up over $100, like $100 and something dollars of EPS this year. Oh my gosh. Alphabet's down 4 now. That's the Siri news, which is not a thesis breaker. I don't think anyone's buying specifically for their deal with Apple, but it definitely was exciting. And we'll have to see what actually comes of it. But like, that is bad news. Okay. What is this? David Sachs just ended up sharing some here. Let's just see what this clip is about. I don't know what this is about. Just David Sachs just says amazing on this clip. Let's have a look.
Working with Nick Shirley on this? I'm not working with Nick Shirley on this. Nick Shirley, I think, does a great job exposing how so much of that money's wasted. I asked this question of Matt Mahan, who's running for governor. I was like, dude, where'd the $14 billion go that went into that high-speed rail project? There was like no, it's a high-speed rail, but there's no rail. Yeah. There's nothing. $14 billion. I'm like, whose pocket is that money in? Right. Like, everyone should ask that question of your government, of your elected officials, of your politicians, of your leaders. Where the hell did the money go? And in many cases, you'll find that it just went to create wealth for a few people that are cronies or thieves or that stole it, or it was used to create fake jobs that aren't productive, meaning no one's making anything. They're just taking money and living off of that money from the government. And both of those are not what was promised. When people pay taxes and the government says it's going to do a service, we need to hold the government accountable to do the service. And that just doesn't happen. So I think Nick Shirley holds the government accountable I think there are dozens of copycats, which I friggin' love. You go out and show the crazy shit that's going on and ask the tough questions, run the audits. Treasury in the federal government should be running the audits and figuring out where'd all the money go. Whose pocket is it in today? You can follow dollars. Where did they go? Who has all that money? Who has the nice home? Who has the Bentley? Who has the lakefront home? Like, where did all the money go? And I think we're going to be really shocked and surprised if we actually keep going with this narrative. And that's what everyone, this is not political. This is not Dem versus Republican. This is just straight up like how government should be run in a democracy. Hold it accountable, ask the questions, and be comfortable asking those questions. So I think that's something we should all be embracing. And anyone who fights back against it is simply un-American. And I think it's a real question, because they're probably the ones that are in some way participating, benefiting, or getting elected because of the fraud, because of the waste. And everyone should be asking this question, both sides of the aisle. And by the way, if the Democrats want to win and crush it in the midterms and become president in 28 and take over the country, if they ask this question and they found answers and they proposed solutions, I think they have a run, and they should be embracing it as much as the Republicans are. It's not political.
Wow.
Yeah.
2 great hot takes.
Really quick, fully aware that that's not David Sachs, guys. I know that's David Freeberg. It was shared by David Sachs. Okay. Fully aware. I said, I'm aware of the All In podcast. But yeah, it is crazy whenever I see numbers like that from time to time, and I'm like, $16 billion. And here I am, I'm like, oh, I got to make sure I have all my receipts. And for that $16 lunch that I had, that was a business meeting and all that stuff. And I'm like, the government's watch. And then like $16 billion goes missing. And I'm like, do they even know I exist? Do they even know I exist? But I do think audits in taxes will become a very, do not start firing your accountants, ladies and gentlemen. Audits in government, I think, are going to be widely AI accelerated. Because why would they not be? Real money on the line, and AI is good at going through spreadsheets. Where is Marshall Mathers? Marshall starts, well, actually, he's starting on Saturday. Not on Sunday. We're going to break it up a little bit. Half day on Saturday, half day Sunday. So we're starting real early. And then, but I don't think he's going to come on the stream until next Monday. Not this upcoming Monday. Just so he can get his footing in a little bit and understand what the heck this community is about, rather than me just throwing him to the wolves. And what I actually might do as well is I might do a separate stream to introduce Marshall to you guys, rather than just bringing him in. And because I want the actual daily streams to just be us talking for, an hour and a half or whatever. It's going to be a little bit weird if I'm talking with him where he doesn't invest like he buys ETFs and stuff like this, but following the markets as closely as we do. He'll just sort of be sitting beside me while I rant with you guys for like hours. But yeah. No, I did not hire Eminem for real. His name's Marshall. It's not even Marshall M. I'll let him decide if he wants to say his full name and everything. I won't, just in case he doesn't want to do that. Some people don't share their last name. But yeah. Is Marshall a real person? Yeah, there are real people that are not dogs named Marshall. The whole Paw Patrol thing. I think we're going to have to, do some sort of painting or something like this for him, where whenever you guys see his face, we could start putting it on the Marshall dog. He can set that as profile picture. With a right-hand man, you should be able to stream all day. I wouldn't want to. I need to take you know, some of your criticisms in small doses. So that's why I want to do the videos and the live streams. The videos are I can take a deep breath and what's good about the videos is I can almost like post them into the void. And if people watch them, great. If people don't, great. But then I can say it without having a stream of comments that are like, you know, SoFi's down, go jump off a cliff and stuff like this. Well, I'm trying to talk about how this loan platform deal is quite exciting. It surprisingly can be a distraction. Hired someone, but still won't go outside. It's to go outside even more. Now I'll have more time to go outside. But I probably won't. Are you going to get him an intro song? I don't even have an intro song. Okay. Do you go to the gym? I have a gym that I'm building in the house. So I use my gym and my sauna. It's not as good as going to the gym. There's obviously more equipment. I don't have a full gym. There's definitely some machines that I would like. But yeah, I used to go to the gym with Marshall actually. So for, you know, whenever I was like much smaller. Right now, I think I'm about 182 pounds or something like that last time I checked, which was like last night or something. I know you're supposed to weigh yourself in the morning. But before, whenever I was much younger and going to the gym with Marshall, whenever I first started, I was like 135 pounds, 5'10". And then I was 5'11". And after 1 year, I got up to 175. I've sort of been hovering at this weight where, like, if I don't do anything and I'm not constantly monitoring what I put in my body and everything like this, I will just shred weight. I don't know what it is. I'm not even that cardio wise. Like, I don't get as many steps as I probably should or something like this. But my metabolism is so fast that I will just shred weight if I'm not constantly thinking about it. Wait, you grew? Yeah, I was like 17 whenever we were going to the gym. I grew. Marshall's an old friend. Like, we went to high school together, you know, but he went into software and I went into financial services. And then we just rekindled and I offered him a job. You're 25, just wait till you're 49. I'm 28 and I can't wait till I'm 49. Well, actually, I can wait, but like, hopefully I get there. Put your Apple Watch on Marshall and make him get your steps for you. Yeah. I was actually thinking, like, as part of like not a benefits plan, but I was like, should I get him like a company Whoop? Like, does he need to be a part of the team? But he's a big boy. Well, I mean, he's not a very tall guy, but he is he's got one of those frames. Like the Steven Fiorillo frame where, like, you're like, were you born with a chest like that? Or did you just did you make that? How does that happen? We're not the same build. We're like the what are those two guys, like the short, like, built dude and then the tall skinny one? Those are our builds beside each other. Is he cute? He's married. Hands off. He's a married man. Dude, Meta down 8.5%. Damn, bro, you're calling him a thick boy before he's even hired. He's a thick boy. He's not fat at all. He's not fat. He's built. He cares about going to the gym a lot. He's a strong dude. He's a legend. I can't wait for you guys to meet him. He's actually awesome. He's going to fit in perfectly. But there will be bullying and shaming for sure. That's what friends are for. I don't talk crap on Amit and Tevis and Roy and all of these people because I dislike them. You do that to your friends. Those are the people that I feel if I'm not making fun of you, I don't have any respect for you. Okay? I make fun of my brothers and my dads, my best friends and all of this. Those are the people I love. Those are the people that you hopefully are not going to take offense to what you say. So if you see me making fun of Marshall, it's because I love him. Is Marshall insecure about his lats? Dude, he could probably jump out of a plane and slow his descent. His lats are fine. He's wearing a natural body squirrel suit. Did I say dads? No, I have one dad and one mom. I meant, oh, sorry. I said if you're not making fun of your dads, like you guys are plural. I can't say if you're making fun of your dad. You guys don't all share one dad. You guys have dads. You guys are the plural, not the fathers. But if you do have dads, I mean, that's sick too. Whatever. Rumor has it Amit's kids will have dads. Yeah. I got there before you, Edgar. I beat you to it. All right. Tanner, can you say, well, I think it's bagel, but I would naturally say bagel. Can I get a bagel? Bagel. I don't know. I actually don't even know what I say now. I walk into hey, can I get a bagel? That's how I'd say it. Tanner, thoughts on ICE? Daniel, you have used too much of your time online. If you're coming to me, the Canadian investing guy, Tanner, what's your thoughts on ICE? You've lost sight of what's important in life. My opinion on ICE means nothing and shouldn't mean anything to you. Are you from Canada? I am from Canada. Do you watch Community? I've seen Community through. I've seen I've seen it. Tanner, what's your thoughts on LeBron James's legacy? I don't know, but I have seen the clips of him lying over his years where he'll talk about like knowing something or meeting somebody or something like that. It's very funny. I don't know what got him to start doing that. Like, bro, we already expect you. We already love you for your basketball playing abilities. And who's that other guy? Scottie Pippen. Like, yeah, no, I met Satoshi. It's like, what? Who is teaching you guys how to talk in the locker room? Enough. Okay. Or on how many he's on one page book of every book he reads. Yeah, there's something about him reading every book or something like something crazy like this. LeBron's an interesting character. I would never want to be that famous. It literally has to be awful. Nebius down 7% today. Yeah. Happens. Tanner, will I financially recover from today's market? I don't know your portfolio. I'd like to hope so. How can you laugh when the market is burning? Because I know it's going to come back. I literally have, like, I'm so far past trying to learn how to behave in markets. I know it instinct. Like some people, I think whenever they get pitched on stock investing, you're like, hey, you know what? The S&P goes up more and more over time. And then some people end up watching the markets go down and then they go, oh, the markets are rigged, and they get all these sort of things. And maybe some of you guys are feeling that right now. The market is not rigged, at least not in the long term. There can be manipulation. There can be times where things get really, like things look very bad. But over time, the stock market is a weighing machine, not a voting machine. And what ends up getting taken out is the noise, and what ends up that being replaced with is what they're fundamentally doing in the company. Whether or not you're a trader or an investor, that is a fact. Okay? And because that's how I think, that those are facts of the market, I stay extremely calm during times whenever Nvidia is down 3.6%. And then whenever I have these rants or people say like I'm Tantrum Tanner or whatever, it's not because it's like I get whenever people, I don't know, just disregard, I don't even know what I want to say. I just am fascinated sometimes by the way that some people think, because it's so differently than the way that I think. So I'm like, how can you possibly not see what I'm saying? But of course that's the case, because you have different different beliefs of how we both got to this point where we're looking at the same stock together. But I, from the experiences that I've had to this point, have led me, one, to have an unbelievable portfolio. I could not be happier. Would I like average prices lower or anything like this? Yes, sure. Love the companies that I hold, believe in the thesis, believe in the future, extremely optimistic, and that allows me to stay calm, I guess. This could be a 2022 year, where there's money to be made, but it's not in tech and growth, and other investors will win. But the majority of the time, the 2023, 2024s, and 2025s, we did exceptionally well. So this could be the year that I get my ass kicked, and then I hope for green pastures after that. I'm numb to the pain now. Bro is glazing. Dude, your kid taught you that word. You're not even using it right. You got to go back to Gen Alpha speech class. Okay. Selling puts, you need a lot of liquidity. Hey, Tanner, what did you do with Micron? Similar boat here. I'm just holding. I'm holding. I think from everything that I've seen from the people that are in this space, is that nothing has changed about the demand, the extreme tight supply demand on memory right now. No, you're actually glazing Mr. Market. Okay, well, maybe that's true. My son is Gen Beta. How do I cope with this? I actually thought, like, for real, I'm like, they need to call that one Gen B. Generation Beta is, look at you guys, bro is capping. And then I think you guys are trying to be nice. Like, this is what I have to deal with. Tan kind of funny today. I think you're Nick. I actually think you're trying to give me a compliment. But every other day, you're like, this guy usually sucks. Today, he's doing all right. Kind of funny. It just hurts. Tanner, ditch the hat. Yeah, I could. I just don't want to. I find, honestly, with short hair, like, what is this? What's going on here? Why do I have this huge, like, I actually don't like the way that my hair falls. So I've just been putting caps on it lately. I might end, like, instead of going to Turkey, I might do the opposite. I might go bald. Hair is making me look ugly. It's due to blood flow. Yeah. You have to train it when it's wet. No, I'm not doing that. That would require me to care at all. And I don't. I'm not training my hair. I'm not in high school. If I get ugly, my girlfriend's just going to have to deal with it. I am losing my hairline, but for real, I don't care because hats exist. Massaging your scalp can help with hair loss. Evil Fandango, that's your second tip on hair. That's what you do for a living. I now know. I'm ugly maxing. That's another alpha. That's really funny. He's ugly maxing. That's really funny, man. Hymns can help. Tanner, when are you getting married? When's there a baby, Tanner? I think I'm at the point now where if there's a baby, Tanner, it just happens. You know? But like, I'm not looking for a specific time or something. I don't know if trying is the right word. I wouldn't say that's what we're doing. But yeah. Is your sperm healthy? Well, that is, so I know this is not what you guys came for, okay? But I do care about that a lot, and that's why I do ice the boys in the sauna. The sauna is terrible for sperm count. But yeah. But maybe you know what? I'm gonna skip on that joke. Okay. Sailor is on CNBC. He is. Let's have a listen.
Base to be able to collateralize it, you couldn't have created this instrument. It was, we did 4 other preferred stocks before we hit on this one, and we did dozens of other.
The crypto infrastructure simply wasn't there, wasn't sufficient to hold up the building, so to speak.
You needed a really big publicly traded company with $50 billion of digital capital on its balance sheet and a lot of equity in order to create this sort of instrument.
Michael Seller, really glad that you're on set with us today. Important conversation, really interesting equity as well.
Wow, great timing. Okay. What kind of stream did I stumble on? Bab in the chat acting like he stumbled upon the stream. You're here every day, and I love you for it. But let's not act like you don't know what you stumbled upon. You are so gay. Thank you. Thank you. You guys are always kind. That is the same person that I'd meet in real life, and they'd be like, so nice to meet you. Can I get a picture? Absolutely, brother. Yeah, for sure. Wait, were you the guy that said you are so gay in my chat? Okay, just getting through that. ladies and gentlemen, thank you all so much for watching. Really do appreciate your time. Hold me accountable. I need to get this SoFi video out today. The loan platform business update should be quite motivating. But until next time, thank you all so much for watching. Really do appreciate your time. And bye for now.